Hello, everyone. Welcome back to our market wrap-up for Friday, June 19th, 2026, brought to you with data from Yahoo Finance. Today's session in the Tokyo stock market looked like a massive celebration on the surface, but if you look underneath, it was a fiercely competitive day, defined by extreme market polarization. Let's dive right into our executive summary to see exactly how it all played out. Executive summary. Today, the Nikkei 225 managed to close up 196.57 yen, or plus 0.28%, finishing at 71,250.06 yen. This marks a spectacular 7-day winning streak, and the 5th consecutive day of hitting an all-time record high. Riding the wave of yesterday's Wall Street rally, buying interest surged right at the opening bell. The index expanded its gains by over 800 yen in early trading, even breaking into the 71,900 yen range. However, it failed to breach the psychological resistance line of 72,000 yen. That triggers a wave of profit taking from investors anxious about overbought conditions, which eventually erased most of those early gains. Interestingly, buying momentum wasn't actually widespread across the board today. On the prime market, only 647 stocks advanced, which is about 41.6%, while 869 stocks declined, making up 55.8% of the market. Out of 33 industry sectors, only 6 finished higher, while 27 closed lower. But the reason the index held up so well was entirely thanks to the non-ferrous metals sector, which put the market on its back by skyrocketing a staggering 8.67%. 4 key catalysts drove the market today. First, Fujikura hit a daily limit up after announcing a massive earnings guidance upgrade due to exploding cable orders for hyperscaler AI data centers. Second, Kioxia jumped 12.1% on booming demand expectations for AI memory chips. Third, consulting firm Bay Current plunged 6% following a weak forecast from U.S. giant Accenture, triggering a chain reaction of selling in the consulting space. Fourth, Nikkei surged after announcing a massive 100 million share buyback program. On the macroeconomic front, the dollar-yen pair hovered around 161.27 yen, continuing a trend of a weak yen and strong dollar, which offered key support to certain export-driven stocks. However, the broader Topix dropped 23.22 points, or minus 0.57%, to close at 4,044.96. Even worse, the Growth 250 index tanked 2.9%, highlighting the clear vulnerability of emerging growth stocks today. 2. Macroeconomic indicators and technical analysis. Now, let's break down the major market indicators with the exact numbers. You can see them displayed on the screen right now. The Nikkei 225 closed at 71,250.06 yen, up 0.28%. The Topix fell to 4,044.96, down 0.57%, and the Growth 250 index plummeted 2.9%. Index. On the prime market, the advancers to decliners ratio stood at 647 to 869, with 40 stocks finishing unchanged. Sector-wise, 6 sectors rose while 27% fell. Trading volume reached 3,154 million shares, with a massive trading value of 14.61 trillion yen. The US dollar traded at 161.27 yen, reflecting a deeply weakened yen. Let's do a quick replay of today's intraday action to see how the emotions shifted hour by hour. The opening bell, benefiting from yesterday's US rally, buying orders led the way. Right after the open, the index surged by over 800 yen, hitting that 71,900 yen mark. Mid-morning 10:11. This is where the market hit a wall at the 72,000 yen resistance level. After 6 days of relentless rallying, high price anxiety set in. Profit-taking orders flooded the floor, causing the gains to shrink steadily. Morning close 11:30. The market wrapped up its morning session barely holding onto positive territory, with non-ferrous metals and oil sectors doing the heavy lifting to keep the index afloat. Afternoon open 12:30. As soon as the afternoon session kicked off, the index slipped into negative territory. It spent a chunk of time trapped in a tight box, fluctuating wildly right around yesterday's closing price. After 13, the index started testing lower grounds, eventually dropping all the way to the 70,500 yen level. Fortunately, dip buyers stepped in at those lows. Right before the closing bell at 15:30, a massive wave of index buying rushed in during the closing auction, lifting the market back up to finish up 196.57 yen. This secured our historic all-time high and 7-day winning streak. Next, let's look at performance by sectors and factors based on the S&P Japan 500 data. Looking at the 1-month, year-to-date, and 12-month cumulative returns, it becomes very obvious where the smart money is moving. The absolute hottest spot is the non-ferrous metals sector. It's up 18.5% over the past month, 42.3% year-to-date, and a staggering 68.7% over the last 12 months. Information technology, including electric appliances, is following closely behind, gaining 8.2% in the last month, 29.1% year-to-date, and 54.3% over 12 months. The energy sector, fueled by rising crude prices, is also putting up solid numbers, up 6.4% in a month, 15.8% year-to-date, and 22.1% over the past year. On the flip side, several sectors are looking sluggish. The financial sector dropped 4.2% over the last month and is up just 6.3% year-to-date. Healthcare is struggling too, down 2.8% over the past month and down 3.1% year-to-date. Consumer discretionary is also showing weakness, losing 1.3% over the month. Meanwhile, materials, industrials, consumer staples, real estate, and utilities are all seeing relatively flat or modest movements. To give you a very clear picture of today's sector leaderboard, let's look at the top and bottom rankings. Top sector's non-ferrous metals absolutely dominated the day, locking in a massive plus 8.67% gain, driven by Fujikura, Furukawa Electric, and Sumitomo Electric. Oil and coal products followed with a plus 2.42% increase, led by INEOS, Cosmo HD, and Idemitsu Kosan. Mining gained 1.77% thanks to INPEX and No Energy. Glass and ceramics edged up 0.52%. Electric appliances finished up 0.42% on the backs of Kioxia and Shindingen. And pulp and paper wrapped up the positive list at plus 0.35%. Bottom sector's banking took the biggest hit today, dragging the broader topics down as expectations for an early interest rate hike cooled off. Following the banks down were precision instruments, other financing, pharmaceuticals, securities and commodity futures, and retail trade. Let's look at the top 5 individual stock contributors that lifted the index today, as well as the ones that dragged it down. First, the top 5 gainers. Number 1 is Fujikura, hitting its daily limit up and single-handedly pushing the index up by about 700 yen. Number 2 is Kioxia, jumping 11,700 yen on AI memory demand. Number 3 is Isuzu Motors, gaining 90 yen on a broker upgrade. Number 4 is Furukawa Electric, soaring 7,000 yen as it rode the non-ferrous metal wave. Number 5 is INEOS, capitalizing on rising crude oil prices. Now, for the bottom 5 decliners dragging us down. Subaru felt the heaviest downward pressure today, dropping 136.5 yen on a broker downgrade. Bay Current was next, tumbling 344 yen on that Accenture fallout. Rounding out the list were Mitsubishi UFJ Financial Group, which led the banking slide North Sand, caught in the consulting sell-off, and major pharmaceutical names that saw steady profit-taking. Third, margin trading trends analysis. One of the most telling parts of today's market was the margin trading data. We saw a highly unique pattern of extreme margin buying concentration, specific breakout stocks, alongside short covering in declining sectors. During the morning session, retail investors heavily piled into margin buying for exploding stocks like Fujikura and Kioxia. There was a ton of aggressive retail sentiment betting on those limit-up buy orders. But in the afternoon, as the topics started slipping, short sellers who had bet against declining sectors like banking and pharmaceuticals began buying back shares to lock in profits or cut losses. This short covering acted as a crucial safety brake that limited further downside for those sectors. On the index side, institutional trading tilted toward net buying right at the close, pushing total ETF trading value to roughly 595.7 billion yen. However, growth ETFs saw heavy net selling as that index collapsed 2.9%. When we look at the market stability via the limit up to limit down ratio, Fujikura was the lone stock to hit a limit up, and thankfully, not a single stock hit a limit down today. Overall, margin buying concentrated intensely on AI infrastructure large caps, while short selling pressure pounded the growth and consulting spaces. The 2.9% drop in the Growth 250 index shows that short selling pressure on emerging growth stocks is building rapidly, suggesting a short-term correction risk ahead. IV. Top corporate movements driving the market. Let's unpack the biggest individual corporate stories that defined today's trading. 1. Fujikura, 5,803. AI data center cable demand explodes, triggers historic earnings revision. Fujikura dropped a massive earnings upgrade after the bell yesterday. When the market opened today, a wave of buying orders completely overwhelmed the stock, leading to a limit-up finish at 5,161 yen, up 700 yen. The numbers are mind-blowing. They raised their first-half operating profit forecast by 93% from 920 billion yen to 1.74 trillion yen. They also bumped their full-year operating profit by 64.3% to 310 billion yen, crushing consensus estimates by about 50 billion yen. Unprecedented cable demand from hyperscalers like Amazon and Microsoft, paired with successful price hikes and easing hydrogen supply issues, fueled this explosion. This single piece of news triggered a massive chain reaction rally across the entire non-ferrous metals sector. 2. Kioxia HD 285A. Surging on the AI semiconductor memory boom, Kioxia Holdings had an incredible day, skyrocketing 12.1%, or up 11,700 yen, to close at 108,600 yen. The massive buying interest was driven by high expectations for high bandwidth memory, or HBM, and high-capacity NAND flash chips used in AI inference. It was one of the biggest contributors to the electric appliances sector today, helping lift the broader Nikkei index. We are seeing a very sharp divergence within the tech sector right now, where memory plays like Kioxia are hitting new highs, while precision instruments lag behind. 3. Bay Current 6,532. Crushed by the Accenture earnings shockwave. On the flip side, Bay Current took a painful 6% hit today, closing down 344 yen at 5,437 yen. The culprit was the Accenture shock over in the US market. The global consulting giant slashed its full-year revenue growth guidance, causing its stock to crater 18% in a single day. Geopolitical tensions in the Middle East are causing companies to rein in their IT spending, and there's a growing anxiety that generative AI might start automating consulting tasks sooner than expected. This fear spread straight to Tokyo, causing domestic consulting stocks like Bay Current, North Sand, and Globing to all experience heavy sympathetic selling. 4. Isuzu Motors 7,202. Soaring higher on a domestic broker upgrade, Isuzu Motors climbed 4.1% to close at 2,280.5 yen today. The catalyst was a major domestic brokerage firm, upgrading its investment rating on the company. The broker highlighted recovering demand for commercial trucks and expanding exports overseas as key reasons for the upgrade, bringing a steady stream of buyers to the stock. 5. Saikaya 8,254. Exploding upward on a 100 million share buyback announcement, Saikaya recorded an impressive 12.9% jump today, finishing at 281 yen. The company shocked the market by announcing a massive share buyback program of up to 100 million shares. This aggressive move to enhance shareholder returns triggered intense buying interest, leading to high volatility typical of small-cap stocks. 6. Earnings bulletins and other notable stocks. Let's quickly run through a few more crucial stock updates you need to know. First, keep an eye on Asahi, as they are scheduled to report their earnings right after today's close. As we enter the tail end of the earnings season, individual stock volatility is bound to increase. Subaru went the opposite direction of Isuzu today, sliding 5.3%, 2,445 yen, after the same brokerage firm downgraded its rating. Furyu dropped 4.1% after its monthly sales growth slowed down drastically, dropping from a roaring plus 17.8% last month to just plus 1.6% this month. World HD notched its third consecutive day of gains after successfully completing its 250,000 share buyback via Testane T3. Finally, thanks to strong crude prices, Ineos gained 3.1% to 1,264 yen. Cosmo Energy ticked up 1.2% to 3,775 yen. And Inpex saw solid gains, rounding out a great day for energy stocks. Technical momentum, stocks to watch. Now, let's take a look at technical setups that are flashing on the radar today, using data from Yahoo Finance and Kabuton News. Bollinger Band, +3s. Upside breakthrough candidates, unsurprisingly, Fujikura and Kioxia are leading this list after their massive double-digit moves today. Furukawa Electric and Sumitomo Electric are also flashing strong momentum, bursting right through their upper bands. Saikaya and Inpex are also strong candidates to watch for a sustained upside breakout. Ichimoku Cloud, Kumo. Breakout candidates Isuzu Motors is currently testing a breakout above its daily cloud resistance after 3 consecutive days of gains. Ineos and Cosmo Energy are also challenging their cloud resistance levels thanks to the sector tailwinds in oil. Fujikura is almost guaranteed a clean break above its cloud if it maintains its current momentum next week, while Inpex and Mako are also approaching key breakout points. Downtrend caution stocks, you'll want to exercise caution with Bay Current, which is reeling from the Accenture shock, and Subaru, which is at risk of breaking below its 5-day moving average following its downgrade. Furyu is facing heavy downside pressure after its disappointing monthly metrics, while newly listed names like North Sand and Globing, which cratered 9.1% today, are warning of a deeper correction as the entire growth market cools off. The Growth 250 index itself is showing signs of a broader risk-off trend. Theme mapping. To help you map out the market trends moving forward, let's look at the 7 core themes that dominated today's trading floor. Theme 1, AI infrastructure and data center cables, ultra strong, massive investments into AI data centers by hyperscalers like Amazon, Microsoft, Google, and Meta are translating into explosive earnings for Japanese cable and non-ferrous metal sectors. This is perfectly illustrated by Fujikura's limit up, Furukawa Electric's 15% jump, and Sumitomo Electric's 10% surge, making non-ferrous metals the #1 performing sector on the market. Theme 2, semiconductor memory and AI demand, strong. Booming demand for HBM and high-capacity NAND flash memory chips is keeping a strong floor under memory plays, as highlighted by Kioxia's 12.1% jump. This gave crucial support to the electric appliances sector, even as precision instruments faced selling pressure. Theme 3, share buybacks and shareholder returns, individual catalyst. Aggressive shareholder return announcements are triggering powerful short-term rallies. Saikaya's 100 million share buyback and World HD's completed buyback program prove that companies prioritizing capital efficiency are being rewarded with immediate share price appreciation. Theme 4, consulting space collapse. The Accenture shock, weak. Accenture's guidance cut in the US sent shockwaves through Tokyo, hitting Bay Current down 6% and Globing down 9.1%. This has reignited fears that AI might disrupt traditional consulting monetization models faster than anticipated. Theme 5, energy and strong crude prices, strong. Rising global oil prices lifted the entire energy complex today, with oil and coal products gaining 2.42% and mining up 1.77%. Major players like Ineos, Cosmo Energy, and Inpex formed the second strongest performing group in the market today. Theme 6, weak yen and export stocks, mixed. With the dollar-yen pair holding steady at a historic 161.27 yen, export-oriented megacaps should have an easy tailwind. However, performance was highly selective today. Isuzu soared on an upgrade, while Subaru tanked on a downgrade, proving macro tailwinds aren't enough on their own. Theme 7, emerging and growth market correction, weak. The Growth 250 index plunged 2.9%, revealing a harsh reality check for smaller growth stocks. While prime large caps are hitting record highs, smaller growth plays are facing a distinct risk-off environment, widening the performance gap. 7th, Key market news and macro events wrap up. Let's do a quick sweep of the broader macro events and data points shaping the market background today. In the macro space, the dollar-yen pair trading at 161.27 yen keeps Japan in a historic low-yen environment. This brings a classic tug-of-war between strong export earnings and rising import costs. Wall Street's positive close provided a great spark for Tokyo's opening bell, while Japanese government bond futures ended flat at 127.75 yen, showing stable interest rates. On the policy and geopolitical front, the G7 summit continues to debate aid for Ukraine and countermeasures against Russia, though the immediate impact on the trading floor remains minimal. Meanwhile, expectations for an early interest rate hike by the Bank of Japan have cooled slightly, maintaining downward pressure on major banking stocks. We also have some fascinating technical data points from today's session. Stocks flashing a golden cross outnumbered death crosses 196 to 76, showing that the long-term upward momentum is still intact. However, 296 stocks fell below their 25-day moving average compared to 209 that broke above it, indicating a clear near-term warning sign. MACD flashed 102 buy signals against 55 sell signals, while 79 stocks entered an Ichimoku 3 inverted gates bearish setup, reminding us that plenty of names are still facing medium-term downward pressure. On the earnings and analyst front, Fujikura's blowout full-year operating profit upgrade to 310 billion yen completely stole the show. On the downside, Furyu disappointed with its monthly slowdown. Isuzu and Subaru saw their stock prices completely dictated by broker adjustments, while Kioxia continues to see active target price upgrades across the street. The 8th. Comprehensive commentary and near-term outlook. To wrap things up, let's look at the big picture and outline our trading strategy for the coming days. Even though the Nikkei 225 clinched a historic 7-day rally and hit a new all-time high, the underlying truth of today's market was an intense polarization, a spectacular rally for a tiny handful of stocks, masked by a broad market sell-off. Fujikura and Kioxia single-handedly carried the index, while the Topix actually closed down, and 56% of all listed stocks declined due to widespread profit-taking. Here are the 3 near-term perspectives you need to keep in mind. First, while the momentum in AI infrastructure and non-ferrous metals is undeniably powerful, chasing the rally right after a limit-up breakout carries high short-term risk. Expect some choppy digestion as profit-taking clears out. Second, the Accenture shock has triggered genuine anxiety over global IT services spending. Keep a close eye on the upcoming U.S. corporate earnings season next week. If we see more tech and consulting firms trimming guidance, domestic consulting plays will likely face another wave of selling. Third, a dollar-yen exchange rate above 161 yen is fantastic for exporters, but it leaves the market heavily exposed to a sudden reversal risk if the Bank of Japan drops a surprise hint regarding monetary policy tightening. As we look ahead to the next trading session, here are your main watch points. Will the non-ferrous metals sector maintain its rally once Fujikura's limit-up orders clear out? How far will the Accenture shockwaves spread as more U.S. corporate earnings roll in? Will the dollar-yen pair hold the 161 yen line amidst widening interest rate differentials? And finally, will the Growth 250 index find its footing? Or will its decline spill over into a broader market risk-off mood? That is all the updates we have for you today. If you found this market breakdown helpful, please hit that subscribe button, leave a like, and turn on notifications so you never miss an update. Disclaimer on screen and voiced. As a final reminder, this video is compiled using public data from Yahoo Finance and is intended for informational purposes only. It does not constitute investment advice or a solicitation to trade. All investment decisions are the sole responsibility of the individual investor. Have a wonderful weekend, everyone, and I will see you in the next video. Thank you.